Hello traders, and welcome back to my YouTube channel, IPDATrader. Now in today's video, we are going to be focusing on trading psychology once again, right? We're going to be talking about consistency in the market. So if you're a trader and you already have your approach to the markets, meaning whenever you come to the charts, you know what you're going to be trading, when you're going to be trading, and why, and what is it that you're going to be trying to look for executions, and you're still not seeing consistency, then you might want to watch this video till the very end, because I'm going to be providing you with very important tools that will help you towards that consistency goal, right? Because at one point you have to understand that there is no point in you consuming more informational knowledge in terms of technical analysis and price action reading. At one point you have to come down and focus on your psychology, okay? Because at the end of the day, as I always mention, if your psychology is not correct, meaning you know when to stop trading, you know when you feel agitated and you might have to stand up, go for a run, or do a coffee for yourself, you will never make money, because trading itself is a very psychological thing that requires you to be focused and requires you to understand a little bit about yourself. So I'm going to be trying to educate you on those ideas. Do not expect any sort of technical information in this video. The focus of this is going to be once again trading psychology, and I'm well aware that making videos on technical things and tricks and things to look at when you trade usually get more views and engagement and all that stuff, but I do believe it is very important for you to be reminded of some psychology stuff every once in a while, because it will help you more. It will continuously help you more than actually continuously trying to look for the next shiny object of the month or this new strategy, the sniper theme here, right? So we're gonna be focusing on trading psychology. Now, with all that being said, guys, we're gonna be jumping into a whiteboard and we're gonna be discussing some ideas. So let's get started with today's video. So traders, here we are on the drawing board, and as I said, I do not necessarily have a script, but I do love talking about trading, so we're gonna be focusing on psychology, consistency, things of that nature. We're just gonna be going over some general stuff first, and we're gonna be getting into a little bit more of the specifics, right? The very first thing I want you to think about is, there's many people out there, especially out in social media, who will try to advertise to sell you signals, investment returns, things like that, right? You have to be very aware, and you do not have to believe that there is some secret sauce that you're missing, magical formula that you don't know, or anything of that sort, right? There is no point in thinking that there is this bit of information that you don't know that's making you lose. Okay, that's the wrong approach to have. Trading is not about a specific strategy or approach or a specific signal, indicator, whatever you want to call it, that you're missing that's making you lose, right? That's what many traders, many losing traders do believe, right? They see this flashy stuff on social media, sign up for this signal a month period, look at my EA, go buy it now, things like that, right? At one point, you have to understand that there's no more information for you to consume, and that you have to work on multiple things that we're going to be discussing right now, right? So, in order to achieve that consistency that we're talking about, you have to focus on your psychology. That's the very first thing. You have to focus on your journaling process, which we're going to be breaking a little bit more in a second. You have to focus on your, let's do that. You have to focus on your discipline as well. Very important. You can have the very best approach. If you lack discipline, you will never make money. Get that through your head, as harsh as it may sound. Consistency comes from, once again, psychology, journaling, discipline, and execution. For me, this is the key criteria over here. Okay, so let's start talking about psychology, right? And this is where we go back to what I was saying in the beginning. Stop thinking that there is a magical formula that you're missing. Okay, you are not missing any information. Let's do any magical information that is making you lose. And I've made this very clear from day one with the mentorship as well. The mentorship is just there for you to have a support group, for people you can trust, people you can communicate with, people you can share ideas with. You have also a structural approach to the learning material, which is great, but there's no magical formula that you will learn if you join that's instantly gonna make you start winning, okay? Because that's not how trading works. Trading is all about understanding yourself and about these different criterias, okay? So at one point, once again, you have to say enough is enough. I know everything there is to trading, and once again, that's not saying I don't need to learn anything new, but that's just saying I don't need to look for any more strategies or way to justify moves in the market. If you can look at a chart, right, and let's do an example over here. If you can look at a market and let's say you have this scenario over here and you can understand why price um, went down here and bounced up and made a new high and printed a new structural high, this is good enough. If you can explain the moves that are essentially happening, you understand the markets. But that doesn't mean you're going to be profitable, right? Because as we see over here, there's many other components that go into consistency, actually, right? So if you're able to justify yourself's potential moves, that means your market understanding is there, and you should stop focusing on trying to acquire the new flavor of the month and just focus on these different items that we're discussing, okay? So you're not missing any magical information that is making you lose, right? And I'd say to that, focus on what you already know. If you can explain certain moves in the market, you are okay in that sense. Okay, write that down. Take a piece, a pen and a paper. Write that down. It will help you. That's in terms of psychology. Obviously, there's lots more to discover here. I've talked about psychology plenty of times in my channel. You can go through those videos. They will definitely benefit you. Now, in terms of journaling, I get this question every single day, all day long. What do I journal? How do I journal? How do I use my journal? Things like that, right? And I'd say to that once again, it is individual. What is it that will help you remember what to do again and what not to do next time, okay? Journal anything that will help you remember what to do again, what not to do again, right? And for that, you have to have some stats. So apart from that, I'd say in terms of data keeping, you want to journal the time of the day, right? At what time did you execute? The date itself, the day of the week, right? Day of the week, profit loss, essentially your outcome, session, pair, direction. This will help you identify certain patterns. And once again, this will require time. You're not going to be trading for a week, being disciplined and keeping track of your trades. And all of a sudden, you're going to have this aha moment. Okay, I realize every Monday at 3 p.m. I'm losing trades. Right? It will require a little bit more effort than that. You will have to stick with these ideas for for at least a 3-month period. If you can do that, you will have valuable information and data that's going to help you with your trading. That's going to be specifically made for you because you constructed that, and it will be essentially specific for your own trading. So you cannot ask any other trader to share their data, to share their journal trades, because it doesn't help you. He's a different trader. He's doing different things. You have to be looking for your own data, which once again you will get by being disciplined and actually following a process that you can track, right? In terms of discipline, this is so straightforward, yet so difficult to do. I 100% agree with you. Having to stop when a specific threshold is hit in terms of risk, and understanding that tomorrow will be a new day and that the markets ain't going anywhere and that new dynamics will be there tomorrow is very, very difficult to do when you're actually trading and you've actually taken a loss and you want to make it back and you feel bad about yourself, right? So the understanding of a new day tomorrow, right? This is sort of a concept that you have to get through your head, will make you stay disciplined. Please understand that idea as well. Whenever your daily limit is reached, whether that is in the positive or in the negative, you have to close your charts, you have to leave, you have to start doing something else. If you don't, and if you fall for it, you have to remember that the algorithm that prices the market up and down, I've said this 20 times already, um, targets human inefficiencies and will make you fail essentially, right? Because that's what the algorithm does, right? It will go for those human inefficiencies that are being exploited on a daily basis in the market. So if you're aware of that, you will have a greater chance of actually staying disciplined and following your plan. And this is just as simple as when you're emotionless, meaning during the weekend or after your session, once you've cooled down, you've done what you needed to do. If you do not have it already, create a trading plan and stick to the damn thing, right? And this is once again easier said than done, but you want to be a trader, you have to do this, okay? You have to think it that way. You want to be a successful trader, you have to do this. You don't like it, you're not a trader, and you will never become a good and profitable trader. So create a fucking trading plan, stick to the damn thing. Whatever the market drops thousands of pips after it's taken you out, that's okay, right? You stick to your plan because that's essentially what happens, right? Sometimes, and this will happen, there is always a probability that your stop loss, let's say you take a sell position over here, your stop loss is over here, right? And you get taken out, and that's the high of the day, and it then drops 1,000 of pips to the downside or 200 pips, whatever it may be. You have to understand that there is a statistically there is a probability that your stop loss will be the high of the day, and that's it. Now when you look at it a little bit from a broader perspective and you go through your journaling, you will realize that this occurrence is very unlikely. Nonetheless, it is a possible occurrence. So knowing that will not make you believe that the broker is manipulating you, that the markets are watching you, that this is not possible to do, and that nobody can win. You have to get out of that mentality. The market does not care about your lot size, account size, any of that stuff, right? You're just one small little fish swimming in a very big ocean. That's what you have to understand. You have to humble a little bit yourself, and you have to get through that idea that, hey, you know what? Nobody is watching me. This was just the probability of my stop loss being the high of the day, which is something that Could always happen. There is a probability that that may happen. Nonetheless, a very slim one. You will not find out that this happens 3 days in a row, right? That's just very, very extremely unlikely. So that's just an example in terms of understanding discipline, okay? If you say that you're gonna be trading gold during the London session because that's what your plan says, then that's what you're gonna do. You're not gonna do anything else. You're not gonna worry about different traders in different groups saying, hey, GJ to the moon, GBP USD to the floor, get in, boys. No, nobody cares about that. You're gonna focus on what you think is good and correct for you. And what's gonna be correct for you is going to be to follow your damn trading plan, which you actually made when you were not emotionally unstable, meaning you were not agitated by a recent outcome in the markets, okay? Now, the last bit of information over here, very important one in my opinion, one of the keys that will get you that desired consistency is going to be execution, right? Everything over here will not mean anything if you do not have consistent executions, okay? And we're going to be getting into a little bit more detail right now. So when it comes to executions, traders, you have to understand certain things. The very first thing, poor execution equals poor results. Now, consistent executions on trade situations that have an actual edge equals money. Do you see the difference here, guys? It doesn't matter how good your strategy, approach, psychology, discipline, journaling process is. If you hesitate in terms of executions, if you second guess yourself, if you doubt, if you do all of that stuff, that means that you will not be executing consistently and you will never make a penny in the markets. It's just as simple as that. If your execution is poor, you will get poor results. If your execution is good, meaning I consistently execute on things that I believe have an edge, then you will make money. 100% guaranteed. That's just really what it comes down to. Now, if you take a loss and you find that you take two shit trades just right after that because you're agitated about what the market just did, then you will find that you will have poor executions, right? Because if those were the first trades of the day and you didn't take that previous loss, you would not be taking those trades. But because you just took a loss and you're feeling a little bit sad, maybe mad, maybe a little bit, yeah, essentially mad, and you find that you jump in trades like a retard, you will have poor executions, which will lead to poor results. That's just the outcome, right? This is your input, you execute poorly, you get this outcome over here, poor results. Now, on the other hand, you take a loss. It's good, it's fine. Everybody takes losses, nothing to worry. And you understand that, okay, I just took a loss. It is what it is, I executed my edge, did not play out. I'm gonna be patiently waiting for my next opportunity, right? And maybe that happens 2 hours later, right? And then you get a win. Why? Because you identified the loss, you just understood that that's just what happens as traders, and you did not jump in like a retard trying to make it back. You waited for a new edge to appear, meaning you waited for the next POI, you waited for the next risk entry, you waited for the next day, you waited for the next Asian range manipulation, whatever it is that you use to determine a scenario that has an edge, you waited for that. You were disciplined enough where you understood that that loss is just nothing but part of the game and that you have to keep waiting and acting as like nothing has happened and you're still in the very first trade of the day. That will get you consistency rather than jumping right back in like a non-disciplined trader, just to simplify it, and taking a new loss. Now you're compounding losses. Now it's no longer about having good execution. Now it's just about making your money back. And this will definitely be happening over and over again. If you do not wait for trade situations that have an edge, this will be your result. Loss after loss after loss after loss. Very, very straightforward, okay? And just to summarize all it up, guys, if you do not like how the market is treating you on a given day, there is no shame in just understanding that the market has beat you today and that you will come back the next day and try again. There is no shame in that. There is no harm in standing up and saying to yourself, you know what, market? You're right. You won today. You took my money. Nonetheless, I still stuck to my guns at that point. I still have my account. I didn't blow my account. I didn't went in and started revenge trading like a retard. I'm gonna come here tomorrow and I'm gonna try to continue executing well, right? So this is just the very last thing that I'm gonna write over here. If you do not like how the market is treating you, there is no harm in stopping for the day and coming back tomorrow. If you still have an account, you are still in the game, right? I cannot name the amount of traders that blow through their capital in 2 hours because of a stupid mistake, and when you're actually sitting in your bed or you're done trading and you realize what you've done, they start understanding how bad of a trader they really are and how they regret essentially the behavioral pattern that they just performed. So guys, take this video for what it is. I do believe there's excellent value here. If you made it through the entire thing, I appreciate you. Not many traders will do that because everybody just wants that short-term satisfaction of new approach, new strategy, new this, new that, but nobody wants to actually sit down anymore and just work through the stuff, okay? Trading is hard work, okay? Do not believe social media flexing their Lambos, going on the parties, trading on the beach from their phone. Stop thinking about that. Trading is nothing like that. Trading is this. Trading is hard work. And I'm sorry to say, but if I don't tell you this, nobody else will do that. Okay, so trading is hard work. Go through your psychology. Make sure your emotional triggers are you're aware of those essentially, right? You know when you're getting agitated, heated, you want to stand up, you want to take a break from the market. It can get very frustrating very quickly. We all know that feeling. Make sure you're journaling. It will help you remember what to do and what not to do again. Make sure you're keeping data and stats of your trades. It will help you identify what days of the week do you usually perform better? What session is most profitable for you? Things of that nature. Make sure you're disciplined. If you're not disciplined, the previous two things will not mean anything. If you hit your daily limit, you have to stop. Because once again, if you do not like how the market is treating you, you have to stand up and come back the next day, try again, and make sure every time you open a position, you are doing that because you genuinely believe that that trade that you're putting on has an edge. If you're not sure and you're just gambling, hoping that it's going to win, you're executing poorly, which will leave undeniably to poor results. So I hope you enjoyed this little bit of information. I do believe it is important. Please take this seriously. What I just gave you over here will save you years in your journey of trading. You need to know these different items. They will serve you extremely well. So if you enjoyed this and you want to hear more about my approach to psychology, feel free to drop that in a comment below. I will be gladly going through that. No problem at all. And if you enjoyed the video, actually drop a like, drop a comment. I will be reviewing it most definitely. And take care, everybody. Have a great weekend. And I talk to you guys very soon. Thank you for listening.